Safety stock is like your emergency backup fuel tank. It's the extra inventory you hold just in case things don't go according to plan. It is there to prevent a stockout. Maybe your supplier ships late, maybe demand spikes unexpectedly, or maybe customs delays your shipment by 2 weeks. Without safety stock, your business grinds to a halt. So, in simple terms, safety stock is the inventory cushion against uncertainty. It does not mean you overstock, it means you protect yourself from surprises. Now, why should you care? Stockouts are not just annoying, they are expensive. Let's break it down. If a stockout happens, you lose sales. If customers cannot buy from you, they will buy from someone else and they will not return to you. A single stockout might cost you a repeat customer forever. There's operational stress. Teams scramble, rush orders pile up, and costs rise. Brand image suffers. People remember the brand that fails them. Studies show stockouts can slash customer loyalty by more than 40%. That's a lot. Think of Apple product launches. They manage demand so carefully that even with crazy popularity, they balance hype with availability. If Apple had repeated stockouts for months, customers would lose trust, and same goes for your business. What causes stockouts? Supplier delays, production takes longer, shipping is late, or materials are unavailable. Demand surges, sudden marketing success, viral campaigns, or seasonal spikes. Forecasting errors, your demand predictions were too optimistic or too conservative. Here's the catch, you cannot control everything, but with safety stock, you don't have to. You plan for uncertainty. Now let's get a little bit technical. How much safety stock should you keep? Too little safety stock, you risk stockouts. Too much and you tie up cash in inventory. There are different formulas depending on your business to calculate stockouts. There's the simple rule of thumb. Take your daily average sales and multiply it by a few extra days. If you sell 100 units a day and you want 7 days of buffer, that's a 700 units of safety stock. Simple but not always precise. There's the standard deviation method where it gets a little bit smarter. The formula for safety stock would be Z times sigma times square root of L. Here Z is the service level factor. The higher the service level factor, the fewer the stockouts. Sigma is standard deviation of demand and L is lead time. For example, if your demand fluctuates by 50 units a week, lead time is 2 weeks, and your service level factor is 1.65, then your safety stock would be somewhere around 116 units. This is much more precise. There is also supplier reliability method. If your supplier is sometimes late, calculate average delay and multiply by daily demand. For example, if daily demand is 80 units, average supplier delay is 3 days, the safety stock would be 240 units. Now here's the tricky part, balancing costs versus risk. Safety stock is not free. Holding extra inventory means higher storage costs, tied up capital, and risk of obsolescence. So how do you balance it? You choose a service level. Low service level, say 85%, fewer costs but higher stockout risk. High service level, let's say 99%, fewer stockouts but higher inventory costs. Most companies aim between 90 to 95%. The balance keeps customers happy without draining your cash. Now let's look at a real world example. Say you run an online fashion store. You sell 200 jackets a week. Lead time is 4 weeks and demand fluctuates about 40 units per week. You want 95% service level, that is Z level would be 1.65. The safety stock then would be 132 units. So instead of keeping exactly 800 units for 4 weeks, you stock 932 units. That extra 132 ensures that even if demand spikes, you won't disappoint customers. Best practices to manage safety stock. You have to review regularly, don't set it and forget it. Update as demand changes. Segment by product. High value or fast moving items may need higher safety stock. Use technology. Inventory management software can auto calculate and update safety stock. Collaborate with suppliers. Better visibility reduces the need for huge buffers. Balance across network. Central versus regional warehouses may need different safety stock levels. Stockouts are every business owner's nightmare, but with the right safety stock strategy, you can protect sales, keep customers happy, and sleep at night knowing you are covered. So don't think of safety stock as wasted space, think of it as insurance for your business. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more supply chain and inventory management insights. And in the comments below, tell me what's been your worst stock out experience. I would love to hear your story.